Management joins in right now, Mr. Girish Agarwaal, Director at DB Corp, to talk about the numbers. Mr. Agarwaal, thanks very much for joining in. Let's start off with the quarter itself. How would you categorize the quarter? Were you happy with the numbers that you posted?
I'm happy with the PAT numbers because we've been able to maintain the PAT, in fact slightly grown the PAT in the last year quarter and this quarter, in spite of the growth in Jharkhand and Maharashtra. But the overall advertising revenue number are not very good because we grew by around 5.5%, which is much lower than our expectation. Though if you look at the annualized number, we are still at 12.5% growth on the advertising revenue. But I guess the quarter 3 and quarter 4 results were really not, the market was not supporting enough to give the growth.
You're looking at expanding, strategic expansions and consolidation in a big way. Over the year, you've also accomplished rollouts in major markets in Maharashtra. What is the plan going forward, in terms of the existing locations as well as what you plan to expand into?
See, last year we grew in Maharashtra, which is a new state altogether, and also we launched some new additions in our markets, existing markets. Now, next 12 months, I think company is very clear that we want to focus on the consolidation and energize ourselves on the markets where we already have put in a lot of efforts in the last couple of years and see how best we can take the values out of those markets. So next 12 months, our focus is going to be consolidation and seeing that what more value we can extract from our existing markets.
What's the plan in terms of garnering more advertising revenue?
Somehow the advertising revenue is we are slightly confused also because overall it depends on the GDP growth of the country also. We saw that the number declining in last 2 quarters. At the same time, the advertising revenue came down since the sales went down of a lot of companies. So advertising also came down. So it's kind of vicious circle for all of us. But going forward, the indication what we have from couple of sectors, especially education, still looking robust because the first quarter and the second quarter of the year largely depends on the advertising from the education sector. So I think that category looks so far good. So we are hopeful that things should improve going forward.
Let's focus on the radio segment. I mean, you had the fastest break even here in this segment. Advertising revenues for the radio business have also grown 10% YOY. But any plans in terms of probably laying more focus to increasing revenues as well as more income from the segment?
See, radio, as you know, we are a EBITDA positive company in radio and the PAT positive also from last couple of quarters. So we are pretty happy as per our performance goes in radio. But having said that, it is a smaller size. It's around 3-4% of my total balance sheet. So company is really happy with the performance, but it's not a large thrust area for us, to be very honest.
All right. Overall, what's...
So I think we stay more focused on the print, and especially if you look at one thing which we can be happy about is the kind of cost control we have measured in last 12 months and ensured that in spite of the revenue not growing to our expectation, we've been able to maintain the numbers.
Any new additions that we're looking at? Any new launches?
Not anything in next 12 months worthwhile, frankly speaking.
All right. Aside of that, overall trajectory of ad spends, are you feeling that over the next few quarters there'll still be a slump?
I don't know about the next 2 quarters, and I don't want to feel that pressure in the next 2 quarters, but the last quarter which went by was actually there's a lot of pressure on that. It's not the pressure on the rates. Right. I think the pressure is largely on the advertising spend of most of the companies. They're either holding back or I think exactly not clear.
Because for quarter 4,
hopefully in the quarter 1 and quarter 2 things should improve.
Right, because for quarter 4, overall ad growth is slowed down by about 5.5%. So that would indirectly probably directly have a bearing on yourself. But if at all the environment remains the way it is, and you've just said that spends are declining, if they continue to decline, we will see pressure, right, going forward in your profitability, in your overall revenue garnering.
See, we still have some margin on the cost with us, which we have not yet put the pedal on for simple reason because we feel that one major relief to us is the newsprint prices. Because if you see the newsprint prices, which was very high in the first 2 quarters and the third quarter also, the quarter 4, the newsprint prices are largely stable. And the market indications are very clear that in the next couple of quarters also the newsprint price may not increase. So I guess that's one area where the cost control, cost saving will come in. So there are areas which we can further look forward more for the cost control. So if at all the revenue doesn't go up, then we might have to look at that area also for further bringing down the cost to ensure that the overall PAT numbers stay where it is or maybe grow up furthermore.
Just one last word, if you could throw some more light in terms of the overall margin picture.
See, if you look at my mature edition, which is a 3 years plus age group in terms of my mature editions, we have a EBITDA margin of around 34% on those editions. Since I launched last year Maharashtra and before that Jharkhand, so the pressure which is coming down on the margin is largely because of the new additions investment in those markets, and which we hope next year numbers should ease out accordingly. All right, Mr. Agarwaal, thanks very much for joining in. Best of luck for the coming few quarters. Pleasure. That's the management at DB Corp talking about the Q4 numbers. Meeting expectations, they're happy with their PAT numbers, but disappointing with the advertising income that they've got this time around. Pressure point will still build up. 2.5% lower on DB Corp. We're taking a very short break right here. We'll be back in a jiffy.